Good morning. Welcome to this edition of IG Live, a special edition covering the Bank of England interest rate decision in 5 minutes' time. It will help you trade the announcement and the markets following the release. Let's take a quick look at what we've got in terms of where we are. The UK benchmark 10-year gilt yield is down at its lowest level in 2 weeks ahead of the Bank of England's policy announcement, with traders expecting interest rates to remain unchanged for the second meeting in a row at 5.25%. You remember that rates are at 15-year highs. The market, however, will be attentive to Monetary Policy Committee comments that will accompany the decision. Also expected is the Bank of England quarterly monetary policy report with forecasts for inflation and economic growth. Inflation is holding firm in the UK at 6.7% for the latest reading, roughly double that of the US 3.7% and the Eurozone 3.1%. Now, as for growth, the UK economy has remained virtually flat for the past 5 quarters, although, to be fair, it did skirt a recession a few quarters ago. The UK's blue chip stock index, the FTSE 100, has gained this morning. We can take a look at where we are in terms of the move up at the moment in terms of candles. Second day in a row of gains. We're currently trading at 74.33, its highest point there since the 20th of October. Investors given a certain amount of confidence by the decision yesterday by US policymakers to keep rates there on hold at a range of between 5.25% to 5.5%. Earnings today also helping the stock markets here in London. Shell saw strong results. Sainsbury's also up after the supermarket boosted its profit outlook. The results also helping to lift shares of Ocado by as much as 9% this morning. BT, another one on earnings this morning. First half numbers, 7.6% up on the markets. It passed on high inflation costs to customers. Now that means, of course, you and me having to deal with high inflation. And this, of course, is one of the things the Bank of England has got to consider. The inflation rate, even where it is off the highs that we've seen, is still well above the 2% target that it has, which is given to it by the Treasury. And every time it's over that, it has to write a letter to the Treasury to explain what's going on, why it's doing it, and what it's doing in order to try and combat that. When high interest rates are the results of all that. Let me just quickly run through what we had in terms of last time around, because when we saw the last meeting, it was very, very close. We saw a vote of 5 out of the 9 policy members, 5 to 4, saying they wanted to leave interest rates where they were. Those 4 of the 9 voted to raise rates. So there was it was a split decision with Andrew Bailey, the governor, having to come down on the side of leaving things unchanged. How close it will be this time around remains to be seen. We've seen the FTSE 100. Just want to show you what's happening with sterling, because we've seen a little bit of a rise recently. Now, to be fair, some of this in part has been the US dollar. When you get a currency cross like this, you've also got to consider the other side of what's going on. And if we look at the dollar basket, you can see here the dollar basket is down today, and we were well off the highs yesterday after the Fed came through with its announcement. But let's take a look at what we got in terms of a trade here for the FTSE 100. Now, if you see a hawkish comment out from the Bank of England, and if we see another close vote, we might get some buying for sterling at 121.91. If it is the case that that's what's going to happen, your stop would go underneath probably this low down here. Actually, if we move that up, your stop loss down here at the 120 level, 121.91 is where we are. Your price target is up here. Let me move that up or move that down to where we saw that recent high, 122.88. So if you're a day trader, that would be a close sort of guided high. But I don't think sterling is necessarily going to take part in anything like that sort of a rise. And when we get the numbers coming through, we'll be looking not just for the interest rate picture, but also for what's happening in terms of the overall inflation picture, because inflation is going to be key out of all this. Let me take a quick look at what's happening with sterling against the euro as well, because GBP EUR gives us a view of the currency markets away from that more volatile dollar. In today's session, we've seen sterling down relatively heavily. It's been capped out by the 200-day moving average, which you can see has been support at the back end of September, or roughly that area, and now it's acting as a line of resistance. We're currently trading at 114.66. That's €14.66, and we are looking to see just what happens now in the wake of all this. Let me just go back to sterling against the US dollar, because that is going to be the trade, I think, to follow. If we get up to speed with what's going on just here on terms of an hourly chart, or sorry, minute by minute chart, then we will know what's going on in terms of the reaction in the market to what's happening to the movements that we're seeing minute by minute on this chart as we see the numbers break for the Bank of England. And what happens now? A whole ton of numbers coming out. Let me just quickly read them from the top. Maintaining its bank rate at 5.25%. No surprises there. Bank of England policymakers voting 6-3 to hold the bank rate at 5.25%. We had been looking there for that to happen. Bank of England policy likely needs to be restrictive for an extended period. Now, this is something that we've been hearing a lot about from central banks. Look at the way sterling is reacting now. Sterling is climbing considerably on from the lows that we've seen on the session today. It's too early to think about interest rate cuts, according to Andrew Bailey. He said that we're watching closely to see if further interest rate rises are necessary, but they do want to keep interest rates high for some time to come. Now, the forecast shows inflation in 1 year's time at 3.1%. Now, that's roughly just a little bit over half of where we are at the moment, and that would be good. Bank of England sees inflation first falling below 2%, targeting Q4 2025, based on market rates and modal forecasts, according to the statement this afternoon. And so it is looking for inflation to drop over the next 2 or 3 years or so. Market rates imply Bank of England, less Bank of England tightening than in August. It shows the bank rate at 5.3% in the Q4 of this year. Now, that is just up a very short trip from where we are at 5.25%. So I think we can take out of that there is likely to be no move in interest rates now for the rest of this year, according to the money market rates that we're watching. Let me just turn this on to what's been happening with sterling against the euro. Looking at a minute-by-minute chart there, you can see exactly the same price action. We've got money going into sterling, and now it's coming out a little bit. So far as the rest of the news headlines are concerned, the Bank of England estimates that gross domestic product in 2023 will be overall up 0.5%. Now, that was the same as the August forecast, I seem to recall. And in 2025, it'll be up by 0.25%. But I think that the message is here, they're not expecting a recession. Remember, the IMF was a little bit more concerned about the UK interest rate picture. But at the moment, at least, the Bank of England is pausing on its monetary policy. So there is a move, but not much of a move. Let me just quickly take this chart back to the daily move, and you can see this in context of where we are. And you can see that drop we had in sterling on the way down. Now, I was talking about some of the areas of interest to watch out for in terms of a potential trade here. And you can see money going into sterling. For those that had a long position, I suggested your stop goes underneath the 120 level. To be frank, it's not really much moved. 122.04, we're now up over the 122 level. So it does mean that money has been going in, as we've seen, into sterling as a result of this. 6-3 vote to leave interest rates on hold at 5.25%. So the message is that inflation is on the way down. The Bank of England doesn't want to move interest rates again this year. Money market rates are looking at something like around about 0.05 percentage points of increase from where we are. So that really says that interest rates will be left on hold where we are now. So the message I think I'm getting here is that very similar to what we saw last night from the Federal Reserve, is that they're standing ready to move if they need to, and if the inflation pushes things up. I think there's one other area of the market I do want to follow up on, and that is what's going on with oil, because this is one of the biggest component parts. But as Chris Vecchio yesterday was reminding us in Beat the Street, when looking at the core level of inflation, that is without food and fuel, you are looking at declines. So this rise we've seen in the price of oil since the lows that we had back in midsummer, okay, look, we're off the highs, but with the concerns about what's happening in the Middle East, the tragedies that are unveiling there, and the potential for disruption in the oil markets is growing almost day by day. But at the moment, at least, we are on the way down. But this is a concern. And if we do see oil tick up, there will be more problems for inflation here in the UK, in the US, across the Eurozone, around the world. And that could be the trigger to suggest potentially we could well see higher interest rates. But at the moment, at least, I think the message from the central bankers, the Fed last night, Bank of England today, no move in sight, so long as the inflation rate does tend to drop, which is what we're seeing today from the quarterly inflation report, and the growth does stay above flat here in the UK. We've got some really robust numbers, of course, in the States. But I think the message is that 6-3 to leave interest rates on hold. And that gives us this little bit of an interest in sterling at the moment. That's it. I'll be back at the bottom of the hour for Beat the Street. We'll be taking a look ahead to the US markets and some of the stocks on the move. Just a quick hint, we'll be taking a look at Moderna and Peloton, both breaking into what was otherwise a good party today on the indices across the US. They're both on the way down. That's going to put a little bit of a break on some of the enthusiasm that is otherwise seeing on the 24-hour markets at the moment for the US. Join me again in 25 minutes.